The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 2nd. Magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a fantastic weekend. I know I did. It's great to be back with you. Let's make sure that you and I, that we do everything we can to have a magical Monday. And of course, the easiest way to do that is to always remember that life happens for us, not to us. When you and I, we make that one little shift, that one little 2x4 exchange out there, what you and I can do is we can find the gift in every set of circumstances that the universe is going to throw at us. And that's the role of the universe. It's just up to us to decide what it is that means. Now, what I can tell you, the one thing that I mean is that I am grateful for your presence here today. I'm absolutely here to serve you, so feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. Would love to hear from you. This is Magnificent Monday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow futures up about 11 points, trading at 18,139. S&P futures down a point at 2101. NASDAQ futures up 6. They're trading at 44.48. King dollar back 111 ticks, trading out at 95.21. Gold is off, it's up 80 cents, so it's flat. Silver's up 2 pennies. Light sweet crude back 61 cents out here. A quick peek across the globe. Let's go see what we've got going on over in Europe right now. The DAX is off 11 points. The FTSE down about 10 right now, so no big deal out there. In Asia last night, a sea of green. Nikkei up 28 points. That's about little over 0.1%. Hang Seng up 0.2%, up 64 points. The Shanghai up 0.8%, up $27. Now, great to be back with you. And let's go take a look at, and what's interesting here, if we start off by taking a look at the Dow. So what I want to do this morning, at least, I think that each of us should do this, is try to get a better, since February is came to an end, obviously we're in the first trading day of March out here, is well, that means we can go take a look at weekly and monthly charts just to look for some kind of signals out here. And so let's go do that. Let's start off. Let's take a look at how the week ended. So I took the week off, primarily just to catch up on my own personal trading, a little relaxation, of course, out there. And but other than that, just to work out a different time of the day. And so what's interesting here, it's as if not only did Stevie take a week off, so did the Dow. I don't know how that worked out, but if we take a look at the Dow, let me get my crosshair up here. If we take a look at it, let me just explode this up just a tad. Here is the Dow when it closed the week of February 20th, and the close on that session was 18,137. And where did it close on Friday? 18,134. So actually proved, I suppose, proved to be a good week to take off, right? The Dow, I'm picking right back up where I left off. Unfortunately for me, I was looking for a little bit more volatility in the marketplace. And volatility makes for a lot easier for trading intraday out there, but so be it. Now, what the Dow also did last week was it formed that little doji candle. So there's a doji out here, little doji in Stevie's window. Now, what does that mean? What it means is that it has a lot more meaning and resistance than it does at any place else when you take a look at the stock charts out here. And in essence, the Dow is at a weekly resistance area. And that's really from the highs that were out there back in December. So December 26th, if you take a look at the Dow, so you figure we came into the Santa Claus rally, in essence, about the end of the year, December 26th, right? And the high out there was 18,103, and you're at 18,134. So not a whole lot of movement movement between December 26th and where the market closed out last week. Now, this week's candle session on a weekly basis is important to us. It's important because basically the doji candle, and we don't see this. In fact, if I were to, I'll do this. If I pull the stock chart back here, you don't see a lot of weekly doji candles out here inside of the Dow. Now, as I say, has a whole lot. In fact, the last time we see one out here, this was back on March 22nd, 2013. And this is a weekly chart, by the way, that we're taking a look at. So we take a look at the weekly chart. Last time we saw one was back on March 22nd. Let me pull this back just a bit farther, see if there was any kind of resistance out there. And there wasn't. So March 22nd, when that little doji candle was being made, you had the market moving to all-time highs out there at that stage of the game. No different than where we are at right now. And if the market continues to move higher out here, then this area of resistance, which will end up being the high of last week out there, will not have acted as resistance whatsoever. If we do see a lower close this week, well, then the retracement that before I left I was suggesting is going to take place out here. And I still believe that is the case. It's not like we're putting in a major market top or anything along those lines, just simply a little brief. And that's really the doji candle, just simply telling you that the market is tired. But, it can also recharge itself. You take a week off, which is what the market did. It can recharge itself and resume higher. And where would the Dow actually head to? Let's switch over and take a look at Stevie's horizontal trading range lines out here. Let's go take a look. Now, here is, well, this is the composite, but we'll come back. In fact, we'll come back to the composite. I'm glad that that's up on my screen. But right now, we're at the Dow, so let's go take a look at the Dow out here. And here is the monthly chart for the Dow. Let me put those horizontal trading ranges up on my screen. So I'm going to go ahead and I think here, this has both got the weekly and I'm just got the weekly and the monthly out here. Let me turn the weeklies off on my screen. So here, and these levels here that we're taking a look at, these horizontal lines going across my screen. In fact, I'm going to turn off the midpoint line. The midpoint lines, well, I'm going to leave those on. The midpoint lines are the solid lines out here as you take a look at my chart. The solid lines are your primary areas of resistance and support. And this is on a horizontal basis. And you can see how well defined this is. Back when the highs were being made back in 2007, this is a monthly chart, by the way. It looks like you had a little doji candle on a monthly chart back in October of 2007. See how when price moved a bit lower that very following month out there? Now, that doesn't mean that it just simply marked a top. It means that at minimum, what it identifies is a level, is an area where you can start to see a market pull back. That's what we saw, in essence, as we took a look at the weekly chart for the Dow. And so from a weekly standpoint, that's what we're going to be looking for this week. Now, these areas of horizontal support or resistance, they act as significant areas to either pull price up and then stop it in its tracks, or simply pull price down and hold it in its tracks as well. What we know about the Dow right now is that it's up above its old resistance level. The price point there is 17,852. Any close, well, we've got to close above it this month, the month of February. So you've now got your first close above that significant level of horizontal resistance. That really says that 17,852 ought to act as support. Now, this is what we're looking for here from a monthly standpoint, is whether or not that level will hold on a monthly chart out here. Coming back and testing it in the month of February, rejecting that level of 17,852. What that then sets off to both you and I is a move up into the 18,786 level. That's just simply the midpoint. Price does not need to stop there. Oftentimes it does, but it does not need to stop there. Instead, what it's really sending you and I a signal is that price wants to move up to 19,720. So long as 17,852 holds inside the Dow on a monthly basis, what your expectation, what the market is communicating to both you and I, is that price wants to move up to 19,720. End of story, period. It is the way, it is the beautiful way that these horizontal lines of support and resistance work. Now let's switch back to a weekly chart out here, because the weekly charts are going to show some different numbers. reason why they're going to show different numbers is, number one, this is an automated tool created by the great guys over at Traders Formula Consulting, a great tool, and it's using the open and close of a candle session. Well, look, a weekly close is going to be different than a monthly close, and a daily close is going to be different than both of those as well. So now here you can see the weekly close just using the primary trading range boundary lines, the horizontal trading ranges out there on the weekly chart, but using the monthly figures. Now let me go ahead and turn the weekly figures for us. And I think I will turn off the monthlies out here. I'm going to do that. So what actually, I'll leave those on just for a moment, because what we can see here is really in the same general vicinity. So on a weekly basis, take a look at this. See, if we only use the monthly with regard to our numbers out here, I'm going to go ahead and actually turn off the monthlies at this stage. It'll just clear things up on your screen for you just a bit. What we can see here is that on a weekly basis, this 18,120 level, 18,119.17 to be specific, was a significant area. This is on a weekly chart, was its significant area of resistance. Now, with us having a little doji candle out here at this level at resistance, right? So this would be invisible resistance if you didn't have this tool. And if you're an e-signal platform user, go over and check this tool out. I can't imagine that you would want to be without a simple tool like this. Sometimes keeping it simple, you know, that KISS theory, keep it simple. You know, they use the word stupid out there. But just simply, I don't use that word, but I just, you know, that's what the acronym is for. But keeping it simple sometimes is about the most beautiful thing that you could do out here. So we are at potential resistance. It would not be surprising to see the market begin to, no, is it going to pull back here Monday, Tuesday, Wednesday? I don't know when. I don't know if. I don't know if it will. I know that we're up above. We're right at a resistance level inside of the Dow. But what is really key on a weekly basis, hey, coming back and testing and closing back above 18,120 on a weekly basis, that says the next price point for the Dow wants to get up to the 18,745 level. So that's what, now, why are we paying attention to the Dow? I don't know. Hey, look, it simply was what showed up on my screen, and it gave us that little doji candle. Now, if we switch over and actually take a look at the composite, let's go back and take a look at the composite, because COMPQ out here, because when it comes to the composite, you know, all last week it was talk about NASDAQ composite 5,000, right? Whoops, I got to put the right symbol up here. Otherwise, we're not going to be able to see anything on my screen. Now, I'm going to put this on a monthly basis. What you and I know, let me turn off this tool here. What both you and I know that finally people caught up with was the mere fact that the Dow, that the composite was going to go shoot for its highs out there. Now, you and I, we talked about this a whole lot earlier in the game. You and I began speaking about this back in June of 2014. And the reason that we did that was because once you close inside a swing point, and on a monthly chart, that swing point is from the month of March 2000. Once you close inside a swing point, it says that you're more likely than not going to go test that swing point, either high or low. In this case here, price was moving higher. So if price was moving higher, you closed inside the low of 43.55.69 and said, hey, you know what? Price wants to go up and test that 51.32 level. So it's not just composite 5,000. It's really going to be, you know, as a NASDAQ, it's likely going to go to the 51.32. Or is that really where it's likely to go to? You know, it's actually cool is going ahead and turning on our primary trading range boundary lines out here. So we get back from this break. Let's go take a look at those levels of horizontal support and resistance. Let's take a weekly chart, and let's understand that the next move up inside the composite is around 51.16 and then 55.41. This is Steve Rhodes. This is TFNN. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless
unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much movement in the futures markets. Let's go back to the NASDAQ composite out here. Now, if we do the same thing, we take a look at last week's action inside of the NASDAQ composite. We're not going to see that same doji candle out here. We're just going to see what amounts to basically a little spinning top out here. We're going to see a narrow trading range that took place. We're going to see a small-bodied candle. That gives us an idea that the market is also a bit tired out here. If we take a look at just normal A to B equals CD patterns that are available to us inside of the composite. Again, it's a weekly chart that we're looking at. The A to B equals CD price projection for us comes up to a level of, well, the 1 to 1.272 level is what was hit last week. 49.62 was the price projection on that. Price got up to 49.64. So unless on a weekly basis we see some kind of reversal signal out here, what the message of the weekly chart for the NASDAQ composite with regard to our A to B equals CD pattern patterns is that price should target the 51.91 level. So remember 51.91, that's a natural area for price to move to. We're beyond the 1-to-1 A to B equals CD. Everything shows the strength inside the market, inside the NASDAQ, coming off that significant October low that we saw last October out here. And price is likely going to go target 51.91. Now back to the chart here to take a look at those natural areas as well of horizontal support and resistance. And 51.16 on a weekly basis happens to be that midpoint. Price does not have to stop there. And price is now what's going to be interesting is the actual high from March of 2000 is 51.32. So you got 51.32. Now I'm going to switch this. This is the monthly chart that we're taking a look at, and it's actually, but I've got the monthly chart and I've got the weekly profile. So let's try to sync things up here. Let me put the monthly horizontal levels out here, and I'm going to turn the weeklies off. So we take a look at the monthly levels. What this actually shows us is that last week with the composite, of course, I'm on the weekly chart here. Let me do this too. No, okay, we're good. I'm on monthly and monthly. We got everything all squared away. So what we can see here in the case of the monthly chart here for the composite, notice that primary range, that's the solid thick line, was down around 45, 35. Price closed above that here the month of October. 2014, came back and tested it here in December 2014, and then boom, on its way. So what we're likely to look at, even though we took a look at the A to B equals CD pattern, this is a longer-term view. The real area of resistance inside of the NASDAQ composite is in the 53.34 level. Expect, and that's on a monthly basis. Expect that to be the level where the NASDAQ ought to move to. Now, whether there may not be the retracement that Stevie was looking for. We may see a continued run-up all the way into the middle of, well, into the beginning of May, then a pullback, and then a move higher into the July timeframe. But what we'll really want to keep our eyes on, it's not the 5,000 level inside the composite. What we really want to keep our eye on is going to be 53.34. What happens to the NASDAQ composite when it gets to that level? When it gets to that level, is that the end of the game? Is that just simply a significant level of consolidation? Is that going to be a retracement? And I don't know the answers to that question. I just know that those are really the levels that you and I want to be paying attention to. Hey, as long as we're over here, let's go take a look at what the S&P holds in its fate for us as we take a look at these natural horizontal levels of support and resistance. On the monthly chart out here, monthly chart says to both you and I that it's 2267 that it's got its sights set on. It's up at the midpoint level here, again, an area where markets can kind of pull back a bit. But it really, unless the S&P were to close below 1985, what it wants to do is it wants to get to 2267. And what you and I both know is that what the S&P actually wants to do is it wants to go ahead and it wants to complete this consolidation breakout. And that consolidation breakout, where is that tool? I'll try it right here. Here's that longer-term consolidation breakout inside of the S&P 500, that little blue area that's on my screen. And if I can grab it and move it, there we go. This is really what it wants to do out here. And that's when you break a consolidation, it was a long-term consolidation. Here's where it wants to trade to. And that's where that 2350-ish number, 2350, 2450, that's really what the S&P 500 wants to do as well out there. So that's our longer-term view. Let's take a look at weekly, take a look at monthly charts out there. And we get back from this next breakout here. We'll see how the market opens. We'll go take a look at some of these equities that are moving and grooving. And then we'll take a look at the noise. We'll go down to daily charts, take a look at what's going on out there. How about that lumber liquidators out there? Now, that's a 2x4 that has been cut in half. In fact, cut in half many times out here. So we'll go take a look at it. Right now, that's trading out at about 39 bucks. It closed at 51. I think it's closing. It's trading at 39. Yeah, it's closing at 39 bucks. It closed at 51.86 on Friday. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 34 points, traded 18,166. S&P up 2 points at 2106. NASDAQ Composite up 12 points. Russell 2000 back 40 cents. The DAX is off 31 now. The FTSE is down 15 points. Gold is flat. Silver is flat. Light sweet crude down 40 cents. Natural gas up just slightly out here. Moving to the upside, NXP Semiconductors. I believe that is a buyout. NXP TFNN and Freescale Semiconductor. You've got Google up $5 right now. Endo International, that's up 3.5%, 4%, up $3.47. Visa is up $4 as we speak. Monster Beverage, what a monster of a stock that is at the moment. That's up $1.28. Costco's up $1. To the downside, we got Pacira Pharmaceuticals off $16. Lumber Liquidators, maybe trading's halted. I got this shown as zero at this stage out here, so I am not sure what's going on with Lumber Liquidators. Tesla is down $4. Navient Corp is off a couple of bucks. Oshkosh Corp down $1.95. Out here, Spirit Airlines down $2. Salesforce Innovation off $1.80. Again, I don't know what's going on with Lumber Liquidators. I don't have anything flowing through my screen. It just looks like I've got something delayed out here. But if we do take a look at Lumber Liquidators and take a look at what it actually has done out here. So I guess there was some story on 60 Minutes last night. I didn't catch it, so I don't know what it was about. Didn't even listen to anything really this morning to know what was said or wasn't said. Let me turn off a couple of things on my chart out here. Let's turn off those profiles. Here's what we do know about Lumber Liquidators. First of all, moving off of the highs out here back in November 22nd, 2013, big wide-ranging bar to the downside, about 3.7 million shares back then. That was after, and it's a daily chart we're looking at, after making out with 332,000 shares. So what that tells you is you had volume off of the highs out there inside of Lumber Liquidators. What we also know is that if we take a look at what it here recently did, so technically, so again, I don't know whatever story it was that was the issue with regard to 60 Minutes. What you know as a technical trader, and these gaps are really our friends out here. And they're friends because they help us identify your natural areas of support and resistance. Well, this equity here also moved down big time, wide-ranging bar. Now, you don't really see the wide-ranging bar, right, because it's a gap. Remember, go back and always paint in those gaps out there. That way you start to use gaps in a different way, the way that they really should be used out here. So you had a wide-ranging bar, in essence, to the downside, if you go ahead and fill in that gap. And that descent began on August 20, well, let's see, what this was, July, right? July 9th. On July 9th, there were 6.4 million shares, and on the very next day, 10 million shares with that big gap down to the price of about $54. The night before, it had gotten down to $69 out there. Now, at that 69, 65, remember the volume you're using, your benchmark, 10 million shares. Guess what? Price got back up to that level back on, February 24th out there, with 1.2 million shares, a million shares the day before that. And then, boom, selling again began out here. So it really should be no surprise that that the selling, all price did was got back to a level of resistance. Now, remember, if you flip this chart around, that's how you want to be able to buy breakouts, right? You want to be able to buy a breakout of a stock that's pulling back into a level of support, just like you want to sell something that's moving into a level of resistance out there. So that's what's going on inside of Lumber Liquidators. I don't know what's going on inside today, but that's what was, we know in the pre-market it was selling around $39, 38 and change out there. Let's take a look at some other things that are moving. Hey, let's go take a look at the Jazzy one, J-A-Z-Z. Of course, I used to have a license plate when I lived in Detroit that said the Jazzy, said Jazz, Jazzy one, number one out there. I ought to get that in the state of Florida. Of course, somebody probably already has that. But nonetheless, let's go take a look at Jazz Pharmaceuticals out here, J-A-Z-Z. Let's go see what this thing is doing. Let me turn on our market profiles. Let's go see what it's doing also in relation to that. So as we take a look at the Jazzy one, Jazz Pharmaceuticals, December 9th, 2014. Looks like that's a all-time, I'm sorry, December the 8th, 2014, up at the price point of 183.84. It's a 52-week high. I think that's an all-time high out there. Yeah, it's an all-time high inside of JAZZ. Now, it made that high with 834,000 shares. The low of which, of that high, the low of December 8th, is 178.68. And price was moving back into that level with 1.8 million shares. It did that on February 25th. Sold off for a couple of trading sessions, but you're moving into a swing point. The price was moving up into a swing point with the volume. Really suggests that JAZZ wants to go test test 183.84. Levels of support inside of this equity down around 170.05. We saw a move down to that level on Friday. That's your TAS market profile low. That level has been tested for a period of about a week or so. That began being tested back here on February 17th. That level is held. That's a pretty strong area of support. JAZZ headed for its highs out here in the 183.84 level. You take that out, and then you've got another A to B equals CD to the upside inside of that equity. If we take a look at Google, just to see what this is doing, it's up only $4 out here, but let's go take a look at Google on a daily basis, see what it is doing out here. So Google back up to its most recent swing point, which takes us to October 31st out here. That swing point had 2.3 million shares. The high is 568. Price, let me go ahead and put a line across the screen out here. If Google can close above that area, we see that it was tested on Friday. So the test on Friday was 3.4 million shares. Testing 2.3 million shares. That bodes pretty well for Google. All Google needs to do is close above 568.73. And if we just take a look at retracements now, retracements from high to low, well, we'd come really all the way back here down to the low that was placed in January 12th. You can see you're also at about the 0.618 retracement level. So Google very likely on its way to 583.64, the 0.786 retracement off of the high from July 22nd. Right now trading out at 567. If we take a look at, let me see what else, Medivation, MDVN is the ticker symbol. Let's go take a look at it. Right now you got the Dow is up 50 points, pretty strong considering Friday's session inside of the Dow out here. But Medivation, that's the equity that we're talking about right now. Medivation taking out a level of resistance out here. Looks like a little shooting star type candle that formed in December 4th, 2014, the high of which was 117.23 out here. What we can see is that price is above that level, and it's let's go see if it's above that level with volume out here. Let me just get my blue line on the chart. That is 645,000 shares. So price came into that level. Yeah, 1.7 million shares out there, closed above it. That was on the 26th. That sets up your A to B equals CD pattern out here. So as we take a look, whoops, didn't mean to do that. As we take a look at that A to B equals CD pattern inside of Medivation, it's probably already made the one-to-one. Let's go see what that price point is. No, it's on its way up there. 122.66 is the number. If we can close above that, the next level of price to gravitate to is going to be about your 131 area. That is ticker symbol MDVN. Now let's take a look at some things here that are moving to the downside. You've got Pacira Pharmaceuticals off $15 right now, down 13% out here. I don't really see what's going on. Boy, that's a big gap down. So let's go see where this thing is moving to. Now, this has had its share of problems. Last time we saw a big problem inside of this equity, PCRX, again, is the ticker symbol, was when it moved down with 3.9 million shares on October the 30th. Now, that today has done 354,000 shares in 13 minutes of trading. So it's got some pretty good volume. Looks to me, if it cannot find any kind of support here, meaning it closed back above 99.14 today, what this equity is very likely to do is go visit the swing point low from January 6th to be specific. Only 885,000 shares down there, but we have to assess volume as price moves into that level, which is $82 even Steven. $82 to $87.50, likely the target area for Pacira Pharmaceuticals. What else do we have going on here? You got Sotheby's. Let's go take a look and see if Sotheby's is catching a bid. And they are not catching a bid. They're off about 6.5%, down $2.86 out here. They're out with their numbers. They generated revenues of $351 million versus $339. So they were able to beat the top line out there. Bottom line looks like that dropped by $74 million. So let's go take a look at Sotheby's. This thing here moving lower so far, 132,000 shares shares. Looks like this has broken a most recent trend out here. Let's go see if it actually has. Let's put our trend line out here. That trend line, let's make that a red. Let's make it a red arrow. Yeah, let's make it a pretty red arrow out here. If we take a look at the trend line, yeah, it's trading in essence right at about that level as we speak right now. So if it were to close out around the 41.27 level, it will have broken a trend. So what does that say to us? Well, the breakout inside of Sotheby's took place, most recent breakout took place back on November 21st, 2014, 3.1 million shares to the upside. So I would have to say that price is likely going to head back into that area. That area being somewhere between 38.11 and 38.72. You break through that, and then price ought to move all the way back down and test the swing point from October 2nd. That says 34.74 would be in its cards. But you got to see if this trend line here holds by the end of the trading session. Let's go take a look at what's going on inside the currency world out here. So let's go take a look at the euro. Euro versus the U.S. dollar. What do we know about this? The euro here back to flirting with the most recent lows, getting back inside and staying inside the swing point from the trading session of January 26th. So the euro has not tested the low of that swing point. The low of that swing point is, well, come on, Johnny. Come up with the number for us, would you? The low of that swing point is 1.109. You're trading inside that swing point. There's really no bullish sign of any kind of significance to speak of as you and I take a look at the daily chart right now. Until you see the euro close above 112.95, what it likely says is that the euro is going to go test 110.97. You break that area inside the euro. We haven't done this for a while. Let's go back to the monthly chart here for the euro. And what that says to us is that price is boy, that monthly chart just looks just downright horrible. If we take a look at from the lows back in 2000 inside the come on, don't do that to me. If you take a look at the lows to the high out here inside the euro, breaking through that swing point that was formed back here in January and February, breaking through that level says that the euro would move down below par. 99 cents to be exact as relates to the U.S. dollar. That's your 0.786 retracement. So it's really important for the euro to hold that swing point low on its daily basis, 1.1097. Right now, a neutral to bearish stance would be would make the most sense out here. Okay, so we got the Dow's up 71 points. Now that is muy importante out here, and the reason that I say that, let's just switch back over and take a look on Friday here. What the Dow actually did, if we take a look at its price oscillator, that's the bottom panel on my screen. Let me go ahead and see if I can do this. Let me squish the middle panel. Let me raise. No, I guess I have to do it this way. Let me do this, and let me do that. There we go. So if you take a look at now the bottom panel of Stevie's charts out here, what you can see is the price oscillator, the McClellan price oscillator out here, that on Friday inside of the Dow may not have been a lot of damage. What, 88 points? Not really that big of a deal when you take a look at it. But the bigger deal was, and hey, it's only 9:47. So we got a lot of time left in the trading session. But what I can tell you is going into Friday's close that these sellers were absolutely trying to take control of the Dow. So it'll be very impressive if the Dow is in fact able to reject that level. It'll tell you that the sellers just don't have any energy whatsoever to speak of at the moment, because once you move down below that zero line of that price oscillator, that's where you really ought to see, especially when you're coming from a price oscillator that was, as high on February 13th as about 2.35 out there as its numeric reading. Prices up in that level, and you start to see the sellers really take control of the Dow. And if they just totally lose control out there, it tells you just how strong the buying is inside of the Dow out here. So, no idea where this is going to close at 4 p.m. today, but at this moment, 9:48, only 18 minutes into the trading session, it is impressive, and it is telling you that the sellers, no way, no how, inside of the one index where we saw the potential for the handoff to be given from the buyers to the sellers, from the bulls to the bears. Well, it was inside of the Dow, and at this stage of the game, they are saying no way, Jose, out there. Otherwise, all price oscillators above the zero line, so they are still out in full bullish formation out here. If we take a look at the VIX index right now trading out at 1352. VIX index still well below its 50-day exponential moving average. That's 1636. That says plenty of liquidity, and there's plenty of liquidity inside the euro, Japanese yen. This is Steve Rhodes. This is TFNN. Dow's up 73, S&P up 4, composite up 20 points. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 75, S&P is up 4, Composite's up 22 points, Russell's up a couple out there. DAX and FTSE still down just a bit, both off about 25 points or so out there. We took a look at the euro with regard to the U.S. dollar. We didn't take a look at the Great British Pound. Let's go take a look at it. This has had the best breakout of all of the currencies out here. But let's go see. Now, in this case here, it's broken its downtrend. That trend line starting back here in, looks like July 15th, 2014. So we can see that it's broken through that trend line pretty nicely. Nice wide-ranging bar as it did that. So that's pretty good. As we take a look at retracements now from that same candle session from that day of July 15th, 2014, from that high down to low here on January 23rd, it does look to me like the Great British Pound was trying to make its way up to the $1.50 level, 1.5808 to be exact out there. That would be nothing more than a dead cat bounce, but it does look like that is what it wants to do. Now, it did have a outside day a couple of days ago. It looks like that was maybe, this is Monday, that's Thursday out here. So what we're seeing here is a bit of a pullback, a bit of a retracement. So on that move, so it is probably just setting up the B to the C of an A to B equals C to the upside. So target prices for the Great British Pound, if you were one that was trading this currency pair, you'd be looking to see what happens right around the 153 level, 1.5323, 1.5295, which is the old resistance of its TAS market profile out there, to see whether or not that holds that support. If it doesn't, then you're looking for a retracement down at about the 151-ish type level. But once that retracement is done, you ought to see a resumption of price to the upside inside of the Great British Pound. With regard to currency pairs out here, we've got gold trading out at 12.11. Gold, in my opinion, is still moving to the downside. To what degree of price we're going to see a move to the downside, that I'm uncertain of, but it is bearish. We're still in a descending trend, descending price line out here. You know, as far as how low can gold get, you know, is the bounce that we saw here this morning, is that the extent of the move with regard to an A to B equals CD pattern? Does that set up the actual C point of an A to B equals CD to the downside? I don't know that it has. I'm not calling that to be the case. If it were, you'd be looking at a price of about 11.04. What I do know is that the big money out here, the large commercial traders, of course, they're not really small, they're saying, they're communicating to both you and I, they do not see an end here. They do not see a bottom inside of Goldilocks. So we'll continue to watch out for that. With regard to light sweet crude black Texas tea out here, really, you know, not doing a whole lot off of that bottom that formed out here back on January 29th. If we take a look at retracement, so from low, whoops, that was got to grab the right tool out here. That makes it a whole lot easier. If we take a look at retracement off of that bottom to the high that was put in. Right now, you're still trading around the 0.618 level. 48.45 is a real important closing price for you to be watching inside of that black liquid. Otherwise, 46.66 becomes your next target and probably a retest of those lows at the 44.33 area. So, folks, great to be back with you as always. If you're off to start your Monday, have a magnificent Monday. Stay tuned because hour 2 of the Trader's Edge is up next. You got the Dow's up 82 at this stage, the S&P up 5, composite is up 26 points out there, and look forward to seeing you bright and early tomorrow morning, or perhaps in about 8-10 minutes or so. Take care, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.